The final part about understanding your income taxes and things that come out of your paycheck is to understand the FICA, or FICA as it's referred, taxes. FICA stands for the Federal Insurance Contributions Act, and it refers to two separate pieces, Social Security and Medicare. And so sometimes on your paycheck you'll see it broken up, sometimes with the acronym OASDI, and that's the Social Security part, which stands for Old Age, Survivor, and Disability Insurance. And that rate is currently set at 6.2% of your pay. And Medicare is the short name. MED is typically what the paycheck shows, but that's the Medicare part. And they also refer to that as hospital insurance for senior citizens and the disabled, and that's set at 1.45%. The way it normally works is you pay those two together, which is 7.65%, and your employer also pays 7.65%. If you're self-employed, you have to pay both pieces yourself, so 7.65 times 2 is 15.3. And also the OASDI, the Social Security part, phases out after a certain level of income, typically in the 100,000s. Somewhere it phases out and you don't pay any more for income earned beyond that amount. But the Medicare tax rate continues to be paid, and in fact, if you get to a very high level of income, say up in the 200,000 range, that's when the rate increases from 1.45 to 2.35%. So these also come out of your paycheck, and there's nothing you can do to get this money back. This is not like this has nothing to do with filing your taxes. It's not part of your tax return or your refund or any of that. You can't get out of paying these, and we all pay this, and there's no exceptions to it. So we're going to come down here, and using these 2016 FICA tax rates, we're going to answer this following question. It says, if a taxpayer is not self-employed and earns $133,000, what are the taxpayer's FICA taxes? Okay, so we're going to pay, we're looking right here, so we're not self-employed, but you see the self-employed has its own set of numbers, so they're not self-employed. And the matching rates are the same as the employees' rates, as I mentioned before. We don't really need to look at those, though they are the same as this. So this taxpayer needs to find out what is his 7.65%. That's the OASDI, or the Social Security. So we're going to take 7.65% of, and now this one only applies to the first $118,500 that you make. So he or she will only pay 7.65% on $118,500. It phases out once the employee makes that much. Now the last part is the 1.45%, and so you see the 7.65, just to reiterate where that comes from, it comes from up here, the 6.2 plus the 1.45. That's why that's 7.65. But then after you make $118,500, you only have to pay the Medicare part, which is the 1.45%. So we need to find the income in excess of $118,500. So we're going to do $133,000, and we're going to subtract $118,500, and we're going to multiply that times 1.45%. All right, so let's do these two calculations. And so you see the 7.65% of the first $118,500 was $9,065.25, and then the 1.45% of income in excess, the excessive income above that was $14,500. We multiply that times 1.45%, and we get $210.25. And so we add these two numbers to get our total FICA taxes, and so we get $9,275.50, and that's what goes in this box right here. So again, it's broken up into this first threshold, which includes both components of FICA, and then after you hit that threshold, you only pay the Medicare part of FICA. So hopefully that explains this. Let me know if you have any questions.